Ethereum is heating up again, holding strong just above $2,500, and it's now at a crucial turning point. Will it rally past the key resistance zone at $2,800 and reclaim the $3,000 mark by the end of June, or will weak market momentum drag it back below $2,400? As of now, Ethereum is trading around $2,522 with a minor dip of 0.24% on the day. Despite $19 million in ETF inflows on June 18th, Ethereum's performance still lags behind Bitcoin, which saw a staggering $388 million surge, signaling continued BTC dominance in institutional flows. However, ETH's market cap has climbed to $304 billion, and trading volume has jumped nearly 90%, hitting $20 billion, a clear indication of rising investor interest. From a technical standpoint, Ethereum is consolidating between the 50-day IMA at $2,434 and the 100-day IMA at $2,472. It's facing immediate resistance at the 20-day IMA of $2,558. The ADX indicator, currently at 13.74, shows weak trend momentum, and while the plus D is slightly above the D, signaling a mild bullish bias, it lacks strong conviction. Still, Ethereum is holding a critical support range between $2,475 and $2,435. A breakdown below this zone could push prices down toward $2,370. But if ETH can break above the $2,775 to $2,800 resistance level, we may see a rapid rally toward $3, especially if volume picks up. In the short term, ETH could rise by 2% to 3%, targeting $2,650 to $2,700 in the next 24 hours. A further 4% to 5% gain might push the price to $2,750, $2,800, assuming sentiment stays positive. Ethereum's price action is tightening, often a precursor to a breakout. If bullish momentum revives mid-month, ETH could reclaim the $2,800, $2,900 zone. On the downside, a drop to $2,280 remains possible if broader market sentiment weakens. In INR terms, Ethereum's predicted range this month falls between 189,000 and 240,000, depending on market drivers and ETF inflows. Looking ahead to 2025, Ethereum's long-term fundamentals remain strong. The price could reach $4,000 or more, bolstered by stablecoin growth, layer 2 adoption, and institutional support. But 2026 might bring a different story. Analysts predict a potential 50% drop in ETH's value mid-year, with bearish momentum possibly causing a 75% to 80% correction from peak levels. Despite this, Ethereum could end 2026 trading between $4,200 and $5,000, highlighting the volatility and cyclical nature of crypto markets. Behind the scenes, Ethereum's development continues at a rapid pace. The recent Pectra upgrade, launched in May 2025, introduced grouped transactions, social recovery via EIP 3074, and higher staking limits, improving both efficiency and accessibility. Ethereum's derivatives market has overtaken Bitcoin in volume, thanks to ETF inflows and DeFi's growing role. Ethereum staking now exceeds 34.6 million ETH, and open interest in ETH futures is nearing $40 billion. BlackRock's $80.6 million investment further underscores confidence in ETH's future. If ETF approvals proceed smoothly and the network continues scaling with Layer 2 solutions, Ethereum could break past $3,000 in the coming weeks. With Pectra enhancing network fundamentals and institutional accumulation mirroring pre-2021 rally patterns, Ethereum is well-positioned to outperform in the long term. However, the SEC's upcoming decision on staking in ETFs expected in July 2025 adds a layer of uncertainty that could influence near-term price action. In conclusion, Ethereum is showing strength above critical support levels and appears ready for a potential breakout. If volume and sentiment align, ETH may rally to $3,000 by month. But as always, in crypto, volatility is the only constant. Stay tuned, stay sharpened. Remember, this analysis is not financial advice. Always do your own research or consult a professional before investing.